All right, this is Daryl Martin with ApexInvesting.com, bringing you another Be the Sniper or Be the Target webinar series. Your choice, make it today. We're going to be talking about the Simplicity trade strategy today. And if you want to check it out, go to ApexInvesting.com/bootcamp. Get free access to our sniper training. Again, at ApexInvesting.com/bootcamp. So with that being said, let's go on over. And, there's risk involved in investing. May not be suitable for every investor. Know what you're doing before you do it, etc. So get that slide out of the way. And then I got some important points I want to cover with you on Simplicity that can be easy to overlook. Okay? All the Simplicity content is on the website, on the sniper page. This is where the video recordings are posted under section 16. So all of the videos are under section 16, including how to set up Simplicity on your computer if you want to. Okay? Now, you don't have to set it up on your computer. You could go in and you could literally just put it on your screen from the room. And you could adjust that to fit your screen and take up an entire screen, or you could make it, smaller if you want to. Okay, so Simplicity is available in the room. So you don't have to get the extra data feed. If you want to know how to do it, check this out. I do recommend, by the way, that you use, this is important, VIX, and you do need another data feed to plot it, because it uses implied volatility in the calculation and compares it to price. And it does it in a very multi-decimal way that you can't see just by watching IV. Okay? So we use the VIX for ES, we use the VXN for NQ, and I teach you how to look at other, if you want to do it on gold, oil, Dow, Russell, so, and multiple other futures and even some stocks as well. I teach you in those videos. Okay? This webinar is going to focus on the basics of pure Simplicity execution. Okay? So that's what we're going over, is to make sure that you'll understand doing a pure Simplicity trade. I've talked about doing it in combination with other sniper trades. This is going to go into actually executing Simplicity based on Simplicity alone. Okay, we still use the sniper charts to look for levels, but don't necessarily have to have a sniper entry from one of the other sniper plays besides Simplicity. Another very important thing is sharpshooter. Okay? If you're really wanting to master trailing, we have a course right here, the Sharpshooter Trailing event. It's a 3-day online event that we did. And me and John and Lori taught about how to trail targets, the psychology of trailing. And if you're interested in that course, check it out. It's worth every penny. I mean, it's 20-something hours of education for $400. You get access to an additional room on top of that. And, if you really want to master this, this is going to be an important thing. I can't teach you every little aspect of trailing in an hour. That's just not realistic. Okay? So this teaches you about levels and targets and, like I said, trailing. So if you haven't signed up for that course, I recommend you sign up for it. Ask other people in the room what they think about it. They're going to tell you it's fantastic, but go ahead and ask and see what other people say. So I got, Todd saying sharpshooter is a must. So the 30-tick chart in that course, yes, it is. So we go over large views, small views, everything. Okay, so that's the sharpshooter course on apexinvesting.com or .net when you log in. Okay, so if you really are passionate about mastering trailing and not just scalping, you're going to want that course as soon as possible. Sign up for it now, and it will help you tremendously. Okay, it'll help you learn how to read the markets, read charts on a whole different level. Simplicity is really simple to execute. It's really easy. The hardest part, just like any trading strategy, is knowing when not to execute. So this is not something that I can cover every scenario in this webinar. Again, that is covered more in the sharpshooter course. So an example would be if the market is just choppy, like this morning in the trade room, I literally said everybody should sit on your hands right now and wait for the market to get better. And then later it got better and we did some great trades. So if you're going for trailing type trades, do you want to do it when the market is just really like fine-tuned rangy and choppy? Is that the time that you want to do it? I mean, does that make sense? Like, if it's just ranging in a small area, don't do it. So you'll end up getting into the top and, buying at the top and selling at the bottom and stuff like that. Now, there are cases where the range is big enough. I want to say it was last Monday night. I got on and I called 8 winning trades in a row and we just scalped them. Okay? So we scalped them for like 9 ticks. We got 9 ticks 8 times in a row. We rocked it. Because that range was big enough. But if it's a small, tight range, it's not where you're going to want to trade. Okay? I want to remind you, this is not the Holy Grail. I wish it was. It's the best way to trail that I know that exists. But your bread and butter is your diagnostic bar normal sniper trades. Okay? That's your bread and butter. Don't just be like, oh, I got to throw everything else out the window and just focus on simplicity. Like, that's your bread and butter trades. That's where you want to keep your focus. So, as a trader, you want to be a scalper who's hoping for a trend. Okay? A scalper who's hoping for a trend. So, that's your sniper trades, your normal, regular sniper trades. Don't throw those out the window. Don't go, oh, I need to go after this new shiny bell and forget everything else I've done. Because people have a tendency to do that. Especially when they're like, Daryl, you only do simplicity trades, right? And I'm like, no. Even in the room, I'm calling out other trades. I do whatever trade is there. So, I still do plenty of sniper trades. I recommend that you still focus on sniper trades. When trading with simplicity, you often will have big pullbacks. Right? Has anybody noticed that? There can be some big pullbacks when you're trading sniper. So, I suggest that you do like micros, especially if you're doing a Lilu account. So, some of you are like, well, I can't trail because, I'm doing Lilu and I'm trying to qualify. But what if you did, 1 or 2 micros inside of an account? That way, that 10-point stop isn't so big all of a sudden. Does that make sense? So you don't have to throw it out the window because you're trying to qualify. But don't go in with full-size contracts. Okay? Don't go in with full-size contracts. And especially even when you're starting, even if you have a big account and you have your own money in your account, start with smaller ones to get used to it. Like, start with Sim to begin with. And make sure you have it down. Because otherwise you're going to get burned hunting for everything. And you don't know what you're looking for. So, you need to have a pretty big account if you're trading a full-size contract on simplicity. Okay? So, start with micros. I mean, you get a big micro move, it can still equal like a scalp. And it gets you better at it and better at it versus like blowing your account out and having your threshold on your trail come up. And by the way, if you don't know what I'm talking about on the Lilu thing, check out apexinvesting.com/funding. Okay? apexinvesting.com/funding. And we talk about how to get funded. And I say, don't trail, don't trail, don't trail. An exception would be if you want to do this, but do it with a micro. Once you're qualified, this is a thing I want to point out to y'all, and this is something that I do. Once you're qualified for Lilu, go down to micros for execution. Maybe like 2 or 5. You're no longer in a rush to meet a goal. Yes, you want to make as much money as possible, but your actual first goal is to slowly but surely build up that buffer until you have a big buffer on your threshold. So trade smaller. Otherwise, what happens is who in here has got funded and then lost their account? Anybody? I've done it before. Is it annoying? All that work? So I got about a dozen people saying they've got funded and they've lost their account. Okay? And we've had well over, 100 people get funded. Here just since we launched the program here a couple months ago. So when you get funded, go smaller. You're not trying to make $2,500 or $3,000 in 10 days or whatever, right? So just go smaller. Just do 2, 3, 4, maybe 5 micros. And just take it easy. I mean, you make $100 a day or whatever, which you can definitely do, especially with trailing. Then you can build that account up. So yeah, I wouldn't do more than 5 micros until you build that account up. And if you want to scale out, what's great, one of the traders mentioned, is that you can scale out. Abdul mentioned that. You can scale out of micros. Like you could get out of 2 contracts, when it hits a level. And you're in 5, and you have 3 on still. So you can't do that if you're only in 1 full-size contract. How many of y'all think that have lost your Lulu accounts would still have them if you would have went in and did 3 or 5 micros only? How many of you think you'd still have it? I'm getting no doubt. Yes for sure. I would. Yes, me, I do. Okay? Listen to that. Just about everybody, I got one person that said possibly, but just about everybody said I would still have my account if I did micros. So, can you have the patience? Remember, we always talk about how you're being paid to be patient. Can you have the patience to build it slowly? So you can earn the right to trade big eventually. Is that worth it? Or do you want to go through the frustration over and over again of getting funded, losing funding, getting funding, losing funding? That's not worth it. I mean, that's going to take you time anyway. You might as well do the faster path, which is actually building it slower. Okay? So Lulu's good if you are a consistent trader already. So you're consistent in sim, and you want to start in sim first. And one thing I want to remind you is patience is not a state of mind. Okay? It's not like you just magically become patient. All right? It's a choice. It's discipline. It's a skill set that you constantly have to hustle after. You constantly have to work on your patience. So, quote here by Cameron, impatient people are attracted to money. Money is attracted to patient people. Okay? We execute simplicity trades often with sell or buy market. This is the only strategy that I use market orders on. So you can be overly patient if you don't take trades. But we execute with sell or buy market. Does everybody get that? So when the entry sets up and then it triggers, we hop in. Because we don't know what the high or low is going to be. Okay? So it's not like we can just have a resting limit order sitting there. So we use market orders for our entries, and often for our exits, I'll use the close button, and we'll go through an example. So you either use the simplicity chart, or I personally like to use my DOM. So I can tell you, I learned how to first trade futures on my DOM, on a DOM itself. And I can go over here and I can hit buy market, sell market, cancel and flatten. Very simple. Okay? A buffer on Lulu I consider to be double whatever the profit requirement was that it takes to get funded. So that is a DOM that you get inside if you have a Lulu account. You get that DOM with it. Has unlimited depth. So if you want it, you have to pay for an extra session, which is like $30 and like $10 for the unlimited depth. So it's like $40 extra a month, but it pays for itself because we do trades literally just based on that. So inside of our Facebook group, if you're not a member of the Facebook group, you should definitely go to Facebook and find the Facebook group for Apex Investing. The first video on there, I teach you a thing called a power scalp, which is a very powerful trade that we do and do very well on. Yeah, it'd be sort of like a NASDAQ book viewer, but like you literally, I mean, let me show you. Except for you can place trades on it. But I mean, it's unlimited. Like it shows every single order that exists. All the way up and down. And then of course you can place your trades on it. You can also set up your brackets in there and everything. Lulu does not cover the data fees, but they don't mark them up either. They just pass them on to you. It's part of the fee. All right. So next, an ATM. When we're using market orders, am I using an ATM? No. Do y'all understand that? Not using an ATM. We manually place our stop, and now again I'll show you an example. Okay? In ranging markets, or even when beginning, it can be best to scalp Simplicity in a range, so you don't give too much back, especially like when you're starting out. So sometimes we just go in and grab 9, 10 ticks and we're out. So in that case, you could put in a take profit on your ATM if you wanted to. If you were just going to scalp or just manually set the take profit. So, also if you're at a major level, you may just want to scalp into it and get out. So exactly, you could make an ATM for Simplicity scalping that you could just flip over to real quick if you were like, I'm going to do scalping based on how I'm reading the market right now. Okay, here's another one. Use the full size chart on NQ. Even if you're trading MNQ, you want to be looking at the full size chart. Okay? You want to have your flux levels and your walls and your dynamic magnets based on the full size chart. Or ES, look at, MES. Don't look at MES, look at ES. Again, that's why I like to use my DOM. I use my DOM to place my trades. I use the chart to watch. Even if I'm doing micros. Okay? Does that make sense to everybody? So even if you're trading MNQ, use your DOM. Or, you could have two charts open if you wanted to, but it's a lot less space to use a DOM. Trade micros until you get it down and have the funds. Okay? So like I said, you can trade them with your DOM, but when I say have the funds, I mean like double whatever. If the profit goal for like getting funded for you was like $3,000, when you got $6,000, then you can start moving into full size contracts. Okay? And if you drop back below that 6, go back to micros. Don't just stay there. Everybody on the same page as me so far? Like I said, these are little points, but they're really important. I know they're not the fun meat and potatoes of it, but they're tips that I think will help you be a lot more successful. Would y'all agree? Taking these things into account? And also, did it open up some of your eyes thinking about trading the micros? That y'all could actually do that and trail even if you're trying to get funded? Awesome. Okay, well, that was the main thing I wanted to get out of the way there. So we're going to go over the basics: entry, stop, break even, a trail, and a target. We're going to make sure you have that down. A full-size chart is like looking at the NQ chart, but you may be trading MNQ, the micro. So really a mini chart in this case. But like looking at NQ when you're trading MNQ. So we're going to go over entry, stop, break even, trail, and target. Some of y'all are a little bit lost on the exact fundamentals of how that works, right? You got pieces down, but not all of it. Yeah, if it takes you longer than 10 days, if it takes you longer than 30 days to get funded, who cares? You got funded. You know? We'll go over a couple different stops and trailing methods. Talk about targets. You can trade Simplicity on ES. Just if you're starting, look at the ES chart, but like trade it on MES, the micros. And then we're going to talk about ranging markets. Okay? Rangy and choppy markets, like when to stay out. So again, I want to remind you, this isn't going to cover every aspect of reading the market. Okay, that's where the sharpshooter course comes in. And I'm not trying to sell it to you. I make plenty trading, okay? I'm just trying to help you, and that course will help you, okay? So let's pull over a chart. And let me get rid of the PowerPoint. All right. So let's look at this and figure out how an entry works. Okay? The first thing we're going to want is red and red. Okay, for short. We're going to want it to angle down on both of them. So everybody get that so far? We're on a 30-second chart. So we're angling down there and angling down there. Y'all get that? Anybody confused about this is what's required for a setup bar to take place? When that happens, the bar becomes the setup bar. Angling down, dotted line, angling down. Okay? So first, does everybody have that down? I'm making this really simple. Is anybody confused about you're looking for two red lines to angle down? Like, it really is that simple. Okay? Then, that setup bar needs to have the low broken on the next bar. Was the low broken on the next bar for this bar right here? Did this bar break that bar's low? And the low can include a wick or not a wick or whatever. It doesn't matter. The lowest point of that bar. No. So, would I enter on this trade? No. I'll cover that in a second, Steve. So I would not enter on this trade. Now here, it's angling down and angling up. So would I enter here when it breaks the low? Also, it's green, isn't it? Right? So I wanted to both be red and both be angling down and break the low. Okay, what about here? We're angling down here. We're angling down here. Both are red. That's a setup bar. Does it break the low? Does this bar, the bar right after it, break the low? Okay. I enter when it breaks the low. I don't enter like, yeah, exactly, like a tick. If it breaks it by a tick, or a pip or cent or whatever, when it breaks one tick, I'm in. I don't wait until the bar closes. I get in right away. So on this trade, I would have got in right there. Let me change the color of these. Something. Didn't say anything about there being a green. I don't know it's going to be green when it closes. Right? Is there any way you knew that bar was going to close up? Red angle down, red angle down. Break the low. So, I'll get to the stop in a second. Does everybody follow me so far on where the entry is? Okay, now the next question. What's your next question? What should your next question be? If you have an entry, what should always be your first question? Where does my stop go? Right? Why not enter on the red bar before that green bar? Well, because it didn't meet the qualifications. It was down green and up red. So it wasn't a setup bar. Okay? Now, here is what can confuse people. It's very simple. The stop is going to be based on the solid line of the setup bar. Okay? So let me draw a line right there. Like that. Okay? But we don't set a hard stop there. Okay? I put my stop usually about 5 points above that stop. So I'll put like a buy stop, up here. Okay? The stop is if it closes above that level. If it closes above this level, then I will hit my close button. Yeah, I'm in sim. Thanks for checking. Does that make sense? So this bar came up here and it touched it, but did it close above it? Did this bar close above where the solid line is on my setup bar? Did this bar close above it? Did this bar right here, did it close above it? Did this bar close above it? So do I get out because it touched it? Or do I wait until it closes above that level? Is it intelligent to go ahead and put a stop in like maybe 4 or 5 points behind it? Just in case it blows up and flies up. So yeah, because we've all seen the market go 30 points in a second flat, right? If you've been trading long enough. So just in case that happens, yeah, it's a little bigger stop than I wanted, but it's a lot better than losing 30 points. So I still have a stop in there. And you know what I'm going to do when it does close above it? If it stops me out, I'm just going to hit close. It'll flatten my position, and it'll cancel out the order. So with that, why wouldn't you have an ATM with an automatic stop in place just in case anyways? If you want to put one in, you can put one in, but sometimes the stop is 2 points away, Chris, and sometimes the stop is 15 points away. So what are you going to use? There's no average. So if you want to have an automatic one in there, so then you can move it, then that's just fine. So I manually put it on. If you want to have an ATM and then move it, there's nothing wrong with that. I don't add a bar timer. We have a bar timer, but I don't add a bar timer. I'm just waiting for it to close and then click. If you want to have a clock up and looking at the 30 seconds, you can, you know. Okay, so I'm trying to take this really slow so everybody gets it. The stop will be if it closes, if the price closes above where the solid line is. Closes, not touches. So you can put it wherever you want to, Mark, but I'm just telling you how I do it. Okay, Ronald, if you miss entering at the proper point, how far past the entry would you consider being safe to enter? Don't chase a trade. That would be my answer. Yeah, we got like a killer simplicity going on right now. Okay. So don't chase a trade. Just you're watching for it, and then you hit sell market. Now, there are times where you get a pullback in another entry, and if you're confident, like let's say you missed the entry right here, and it pulled back and all of a sudden it angled down again, and you want to go ahead and get in and you're confident it's going to keep going, then you could hop back in then. The way you're in a manual stop is just right click and say, you know, buy stop. Okay? So the solid line is your stop loss if it closes above it. And I know I'm going really repetitive and slow. I'm trying to drive it home and be like John. So he doesn't trade Simplicity, so he can't do the webinar. We only let people trade that do what they teach. We only let people teach that trade what they do. So right here, you would just, like when this bar breaks the low, you would just hit sell market. Okay? Let's see here. Got lots of little questions coming in, so I'm trying to go slow on this. Now, why don't we code it to make it automatic? Because do we take every Simplicity trade just because it's there? Kim, I made $1,000 trading 5 micros yesterday on Simplicity. So if you were only trading one, you'd have made 200. So you can easily qualify doing that. Why not move the stop to do a few points behind the wall? I don't know. Why not? Try it out. See what works. I'm just telling you what I do, Grant. If you miss buying the break of the low, we wouldn't be buying the break of the low. You'd be selling the break of the low. And it pulls back, as in your example. Why not enter near a pullback high? You could do that. So maybe you missed the short right here and it pulls back up here. You're like, hey, I got a really tight stop. And you want to hop in like up here? Go ahead. There's nothing wrong with that. Just use the same stop. We have a Simplicity template you can load, but you have to have a second data feed, Heather. You can't just load it unless you have the second data feed. So there's a video under section 16 called How to Set Up a Simplicity Chart. Make sure to watch that video. Okay, let's stick with one trade right now so far, and we'll move forward, okay? I don't want to jump around back and forth, back and forth, back and forth. I want to keep it as simple as possible. All right. So this is a trailing strategy, right? So what should be your next question after you know that you got where your stop is located? Target is an important one. I agree. Okay, but what about before the target? We want to protect it, right? So where would we move to break even? When do we start trailing the stop? Right? Like, when am I going to start trailing this thing down? If I'm going to trail it, when do I trail it? Okay? So there's an aggressive trailing strategy that I use. I'll also teach you a conservative trailing strategy, but it won't get you as big of a profit. Okay? So when do you think I don't start trailing with the solid line right away? I wait until the solid line goes below my entry price. Okay? So once the solid line goes below my entry price, then I start to trail. So if we got in right here, when this solid line gets below that price, then I start to trail. I've added a stop several times. So let's say I had my stop up here. Okay? Then it went down below the entry price. So I could go down here. Now I'm still going to leave it like 4 or 5 points behind it. Because when do you think I'm going to close it? When it touches the line? or when it closes above the line? Right. So it's right here. It doesn't close above it. It actually moves up. The stops on this strategy, which is very unique, will actually move up and down. Have y'all noticed that? There is a horizontal line where I've entered, right here. We had two angled down, we broke the low, that's where we entered, right there. That's what that line is. That's the entry line. Okay? All right, this is the stop if it closes above it. Now that it goes down here, basically at the same point, but we're waiting for it to close above it. So we get a wick. Nope, nope. We move it up a little bit. Now, I don't leave my stop there. Remember, I leave it about 5 points behind where that level is. So a simple wick doesn't knock me out. So this line represents where I'll close if it closes above it. So right here, if it closes above the level, then I'll get out of the trade. So right there, did that bar close above the level? 4 points. So would I exit that trade right there? So if we measured that trade, we got out when it closed above it, right there. That would have been 8 points and 1 tick, or $165 on one full-size contract. If you're doing half of that, then you made $80. Yeah, if it closes above or below, the color will change. I don't care about the color changing. I care about it closing above that solid line. Okay? So now, looking at all this, here, angles down. Does it break the low? Yep. So my entry would be right there. My stop would be, right here. Once it moves, the solid line moves below my entry, then I trail my stop about 5 points behind the solid line. Then I trail it down, 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 up, down. We're waiting for it to close above. It closes above right here. See, it does a lot of wicks, but right there it closes above the solid red line. Now notice it may go to a green line, so I'm going to leave it at the solid red line. Yeah, that'd be 33 ticks. Okay? So on this trade, and this is tonight. I'm not like cherry picking stuff out. Okay? So it would have made 20 points and 2 ticks. Is that pretty sweet? And that's evening trading. How many of y'all would like to catch trades like that in the evening? Post your question again. I got a lot of questions coming through. The stop line can go behind break even, but again, it has to close above it. So I want you to remember that the high and low of a bar, this is an important thing right here. See how this bar, the high went above it, but it didn't close above it. It's red, it closed down. Okay? So in this case, when the solid line moves up, yes, I move my stop up. That is correct. So the stop will literally go up and down. It's a volatile trend line. It's the first indicator I ever wrote. Well over a decade ago. If the solid red line goes from red to green back to red and you haven't been stopped out, do you start trailing again? Yes, you do. On that last example, why not enter a bar earlier? Because the bar earlier, it was angling up and it was angling down. I need both lines to be angling down to have a setup bar. So it has to close above it to be stopped out completely, or your soft stop, like which you may have, say 5 points above or so. Whoops, I just got triggered. I'll take it. $100. So if there seems to be a bar missing, there's no bar missing. That just means it didn't move for that 30 seconds. Let's see here. So stop loss is right above the setup bar, but it's not a hard stop. Correct. Put it about 5 points above the solid line above the setup bar. The solid line. So correct, it has to be above it to be stopped out completely. It would automatically follow the line. Yeah, okay. Can you speak to if both the dashed and a solid line have to flip before entering, or can they both be pointing up or down? If the solid line is underneath the dotted line, you can still enter. But you're going to use the next bar to place your stop. Exactly. I mean, this is 1-0, 2-0 trade, and you're done for the night. Now, do you need to do 3-0? Do you need to do 3 trades to get? I mean, if you made that many ticks, or are you done? If you want to manually draw the stop line, just click here and draw it. It's called the toolbar shortcut indicator. Depends on your goal. I don't care what your goal is. If you made 20 points, you're done. Part of the challenge is the lines don't print until bar closes. That's correct. Do you anticipate down close based on bar activity so you're ready at the bar close? Yes. So I'm going to be ready, and then if I see both those print, boom, I'm going to go ahead and enter them. So there's a question, was there long at 21.49? There was a long before 21.49. So here, let me get rid of this ruler measurement thing. So we had angle up, broke the high. So literally right where we got out was also our entry to go long. Angle up, high broken. I don't care about if it's a doji or not a doji or whatever. It doesn't have anything to do with the strategy. So 21.39.30 is your setup bar. The entry is one tick above the high of the setup bar, so it would have to be the bar after the setup bar. Grant, no, you just got to move it yourself, because you can't do a volatile ATM. So I'm lost on something. Does the stop ever go behind break even? Not once it's to break even, no. So your stop in this case would be right here. And then once the green line passes it, then you trail it on up, waiting for it to close below. Which in this case, it just closed below. So on that one, you only made, a few points, right? Got in there, got out there, made, 12, 13, 15 ticks. Yep, just hit buy or sell market. Now when I'm closing, I hit close. The entry must be the first bar after the setup bar. Yes, because it's one tick above the high or one tick below the low. And yes, it has to be the first bar. If it doesn't trigger on that bar, then you got to wait for a whole nother setup bar. It can't be like the second or third bar after the setup bar. I get what you're asking. Is the stop line above entry bar at solid red line? Not sure what you mean, John. I'm sorry. Does the green bar at 2105? Going backwards here. 2105. Oh, 2105 minutes. Does the green bar at 2105? Nope, it's not above the solid line. It's right at it. If it was, you could hop right back in there anyway and keep trading it again. Let's see, Chris, you're asking about 2149. $21.49. Nothing's happening there. The entry was back here. Don't forget to explain the setup for the Simplicity chart on a PC. What are the symbols? Yeah, reminder again, use VIX. Don't use like the VX June or whatever. Use VIX for S&P. Use VXN for NASDAQ. A lot of things can be programmed, but I just do it manually, and I do pretty well. Here's the biggest thing on this, guys, is you're not going to take every Simplicity trade. So you don't just want to automate it. And we'll go over that too. You haven't necessarily secured ticks at break even, Chris, because it has to close above break even, which means you're probably, if it does hit that before it trails down further, you're probably going to lose some ticks, but not many. So it would not be stopped out on the first red bar. Nope, because this bar didn't close below the line, because you wait for it to close below, and now on the close of it, it's right there. So it hasn't closed below the line. How about NQ short that just happened or is happening? So if you were to take this short right here, then your entry would be like right there. Right? And your stop would be right here. Until this red line gets below the entry. And then you would trail your stop down. Again, if it closes above there. Yeah, 2142 didn't close below. Remember, you got to wait for the close, right? So as soon as this bar closes, the volatile trend line moved down to here. As soon as that bar closed, the volatile trend line was here. It had to close below the volatile trend line. Would you not have got stopped out with the red can? Okay, that's what I'm going over. No. Because you wait for it to close below. One, that close isn't below that line. It's about a tick above it. But two, at the close, this solid line's right here. And remember, where's your stop at? Your stop's right here. We haven't moved up yet. Remember, our stop is the solid red line, or solid green line in this case, of the setup bar. If it closes, not touches it, but closes below it when we're looking at a long trade. Let's see here. Could you please go over one more time which one is the setup bar in a Simplicity trade? It's really simple. You get two green up closes. Up close angle here, up close angle here. That's the setup bar. So in this case, those two were the first up close bar, like up angle green bars. That's the setup bar. When it breaks the high of that bar, you enter. So was the stop at 2153? Yes. That's why I marked that as the stop right there. Using Simplicity for scalps, only use the same stops. That would be a bad risk-reward ratio. Yes, it would be. But it's amazing how well it still works. If using Elite... Now, the only time I really use scalps is if I'm in a range-bound market. Like a big range-bound market. If you're using Elite Room Simplicity charts, is it still recommended to sell or buy market on Ninja? Yeah. Yeah, I mean, you have to. Because you don't know exactly where the... I mean, it's like, okay, it broke the high, buy market. Broke the low, sell market. Let's see here. You want to go with the longer term trend, right? Not pullbacks. No, I go with pullbacks. Because my favorite trades are when it's flown up and then it flies down. Or flown down and then it flies up. So on this long entry at 2140 is when you hit sell market. On this, you mean a short entry? Or 2140? Oh yeah, 2140, yeah, that's right. This is where you'd hit buy market. Over here, this is where you'd hit sell market, like where we're at right now. Is there anything wrong with having OD on our 30-second chart? Good luck. If it works for you, cool. But I don't do it. There's a lot of ways you can do things, Grant. You can change a lot of things up. I'm just telling you how I do it. If you move the stop to break even and then the solid line goes back above break even, would you then move the stop up again? No. So once it goes to break even, I'm not going to move it backwards. Would you want to take that short into that wall? That would be the consideration. So, do you think that's something to think about? That's a very good question. If you're going right into a wall or a stack, a dev, a dynamic magnet, would you maybe think twice about the entry if it's a big stop? Or do you just take it because it's a simplicity trade? So stacks are stacks, right? Walls are walls. You know, flux pivots are flux pivots, and they are strong. So you want to use the same rule. So you still want to have that stuff. Notice one thing I did on my simplicity chart here is I have the walls on there. I have my dynamic magnets, my flux pivots, and my deviation levels. And by the way, I have the flux pivots that I drew from the 6240. The stop does not move until you get past the break even. That's correct. Would you not want to have your short under the wall? So what do you think I would do right here with this wall? Would I have it under it? Or would I just not take it? Don't take it. You got wall and you got settlement right there. Okay? So you could look at this and go, we angled up, we just broke the high, buy market. That would be an example right there. Get rid of my ATM. Grab here and go in. Hit a sell stop. Where's the entry? The entry is right here. So my stop is going to be literally that line if it closes below it. Notice I have it a few points back just in case it, touches it. So that's how the execution would work. Now, why do you think I might be hesitant to take this actual trade? And I'm doing this in sim, okay? It's going right into a flux pivot. So I can look at it and go, is it worth the risk? And I can decide if it is. I could also wait for it to go up and angle up above it, and then I could hop in the trade. When I get 2 angles up and a break of the high. Okay. Let's see here. All right. So I just showed you what an exact entry looked like. So we angled up, didn't break the high. We're angling up. We angled up, and then didn't break the high. We angled up, broke the high. We got in right there. 2 angles up, broke high. That's an exact entry. Would you close the trade if it closes above or below the solid line? The solid line of the setup bar would be the important thing to put there, Chuck. If it closes below the solid line of the setup bar, then yes, I'm going to get out. I'm just going to literally hit close. Since you like to wait for a big trend to end and then reverse, it appears the majority of those Simplicity entries will be against DR. I don't care about DR for Simplicity. I don't look at it at all. I look at levels for Simplicity. Would you close the trade if it closes above below solid line before it hits the initial stop? Well, this is my sort of like worst case stop over here. So if it closes below, like it came down and closed like below my, so there's my entry bar, so there's my stop right there. We'll move our little line up or down, wherever it is. Now I got all these extra bonus lines on here. There it is. Okay, this one. So that was my entry bar, so there's my initial stop right there. So if it closes below that level, then I'm out of the trade. So like right now it's coming down. So maybe we'll get to show you what a stop looks like. We've shown you top profits. I think it's good to see both sides. So notice how I'm watching and waiting. Didn't close below it. So I'm still waiting for it to close below that solid red line. And if it does, that's okay. Or I'm in 10 contracts. I mean, this would only be like, $60 on a single contract. Okay, so what did it do right there? It closed below. So what should you do? You just hit close. Just get out of the trade. Wait for the next trade. Okay? Now, on that trade, I want to point out, just like we pointed out on this trade down here, it was going right into a flux pivot. This one's going right into a wall. Those aren't the ideal trades that you want, because you should expect resistance. The break-even stop is not a hard stop, so it'll be a little bit behind, like say 4 or 5 points behind, but if it closes below, you're going to get out. But y'all get how that is? We went from entry to stop. I think it's more important that you know how to manage your stops than it is to manage your profits first. So we had a valid entry, but it was right into a flux, so that's why we wouldn't want to take it. That's why I'm only taking it in SEM. Otherwise, I'd be on the side taking the trade. I did draw those lines. I can't preset the trade and wait for it to break the high, Chris, because I don't know what the high is going to be. It's not like a diagnostic bar that's exactly 10 ticks. Right? Bar could be 50 ticks, could be 100 ticks, could be 3 ticks. Info on the angles you were talking about. There's a red line, it's angling down. There's a red line, it's angling down. There's a green line, it's angling up. There's a green line, it's angling up. That's all the info there is about it. There's no more info about it. Do I scale out? Usually I'm more likely to scale in a trade than I am scale out a trade. Like if I get sniper entries along the way. Why scale out of a winning trade? The only time I would look at scaling out of a trade is, let's say we took this long and it was coming up, up, up. Okay? And there's a wall right there. Right? So at this point, at this wall, would that be a smart target? I mean, even though it went on up here further, we took this long. We talked about this long down here. Would it be smart to take profit at a wall? Or to at least like set your, stop like right behind settlement? Would that be an intelligent move? Do you have to just trail it? So, is it wise to use targets with this? Targets like stacks, walls, dynamic magnets, fluxes. So if we go back tonight on some stuff we were calling in the room, earlier this evening, let's see here. So like we had a short right here tonight that I called. Okay, if you're in the room, you heard me. Angle down, broke the low, and I said, I'm taking my profit at 10,550, right before that flux pivot. I did the exact same trade a little bit earlier. Right here we had angle down. Where did it finally enter? I know we got in. Angle down there. Broke low. Like by a tick. And then I took my profit right, or maybe I was in earlier. Let's see here. That was it. This is it right here. Okay. So both were angling down. We broke the low. And I said, hey, it's going to go down to that flux pivot at 10,550. I set my take profit at 10,550. Doesn't mean I wouldn't get out sooner, but I set my take profit at that flux pivot. And I'm really glad I did, because look at what happened. It literally came down, spiked it, and flew all the way back up. And I would have given back, 15 points on the trade. Or not 15. 5 points on the trade. Let's see here. Does the strategy win close to sniper strategy? For me, it does. And it makes more because you're taking bigger profits. Your biggest thing that's going to affect your win rate is your ability to filter out trades by looking at those levels. Like sniper, if you take every entry, it's like 70-something% if you don't even filter. When you filter, that's when you start getting into 80, 90+%. Which is why we teach you all this stuff about filtering out of when not to take a trade. Yeah, David makes a good point. On this trade that we took over here, that got us, okay? Could have been like, you know what, that wasn't a great idea. And it was up like $300-400. Okay? I could have went ahead and just topped out of the trade right then. Go, you know what, I shouldn't have taken this trade. It's right at this flux pivot. So if you make a mistake, just top out. So that's a really good point, David. Do you only look at the Simplicity chart and look at walls and flux pivots and deviations and not worry about things like Paul's mini magnet COIs? I look at stacks on the diagnostic charts. So I'll look at stacks, like where you have like 3 different levels together. So I am still using the diagnostic chart for stacks. I also like the diagnostic chart to sort of help me see the ranges sometimes. Because being 30 seconds, you don't have a whole lot of time on here. It's a lot of bars covering a very short period of time. I mean, this is only like an hour. How can you learn to find targets? Go over to apexinvesting.net. And get the sharpshooter course. That's all about trailing and targets. No, you need to get rid of the flux pivots. Just use your ones from 6240. Okay, so the question is, does the Simplicity template have all the same levels plotted on it as a sniper? No. Get rid of the flux pivots off there. Just use your 6240 and your dynamics, and then add walls to it. Rick brings up a very good psychological predicament. It is so hard for me to get out of a losing trade because it's losing, and it's so hard for me to get out of a winning trade for the same reason. You know what, Rick? It's hard for all of us. And one of the things I teach inside that course is I talk about how winners are never satisfying. You know, you win, you're like, I could have got more, or I should have tightened my stop, or I shouldn't have tightened my stop. You know, it went further, whatever. I don't care. Like, just, I made money, I profited, whatever. The loss, I want to take the loss as quickly as I can so I can make it back. I mean, at 10 contracts, I mean, that's only, at one contract, how much loss is that? $33? Right? How easy is it to make back $33? Like, is it easy to make back $33? So I want to take the first stop. If it tells me to get out, I'm going to trust it and I'm going to get out. Because I can make it back so fast. But I can't make it back fast if I let that 33 turn into 3,000 or 300 on a single contract. I mean, there's a Simplicity short right here. We're basically at the entry price. I can hit sell market on it. Get rid of my ATM. Have a stop if it closes above that level. If I want to draw it, I can use my toolbar shortcut indicator and draw it. But you just, if it says get out, get out. Because, you know, you say like you have a hard time getting out on a winning, getting out on a losing, but man, it's even harder giving back a ton of winning money, and it's really hard making back a ton of money you lost. That's harder. That is harder than just getting out. It's not the close of the setup bar, it's the higher low of the setup bar. Okay, so I made back my 300. See how easy it was to make that money back? Was it easy for me to make that 300 bucks back? Since I took my stop? Now what if I wouldn't have taken my stop and it went all the way up here? And I was down like 2 grand. So see, we made it all back because we took a small stop. When the next setup came in, I missed it, but it pulled back to it. I went ahead and hopped in. Boom, made it back right away. Why did I close it? To show you the point that it's a lot easier to make back your money when you take your stops at the correct point. It's also a support level right here where it's hit and bounced, hit and bounced, hit, and what did it do? Bounce. Can I plot the executions on the chart? Yeah. Let's go right here, right click, go to data series, scroll to the bottom, and then turn on text and markers. Saying when you're trading MNQ, use the NQ chart. If you'll remind me tomorrow, I will ask Lori to remove flux and add the walls on the chart in the room. That is correct. X boxes are not needed for simplicity trades. Is it the close of the setup bar or the wick? It's the low or the high of the setup bar. Wick or no wick doesn't matter. A low is a low whether or not there's a wick. That is the only discipline I have left in my trading career. Take your pre-planned stops no matter what. Can I show some trickier setups? There you go. What about this mess? Yes, if this is a wick, it's the lowest price. This is the lowest price of a bar. On this bar right here, that's the lowest price of the bar. That's the open and that's the close. So that's the lowest price of the bar on a wick. Running up, that's the highest price of the bar. So we're only concerned with highs and lows. We don't care if it's a wick or not a wick. We just care about the high and the low. All right, so looking at this. What are you doing? Are you trading? Like you see this chart, got a nice trend down, you get it, and then all of a sudden everything is just whack. This works with 30-second bars. That's what I do it on. I don't do it on any other bar. You cannot actually chart it on tick-based bars because of the way the volatility indices feed. It'll crash your NinjaTrader. Yeah, simplicity can help you recover from losses a lot faster than a sniper trade, which is a big benefit of knowing how to do it. But it's really important that you see a chart like this and you just leave it alone. When it's just like up, down, up, down, up, down, and the lines are crossing red, green, red, green, red, green, red, green. You know what the name of the indicator is? Choppy market warning. That's why I wrote it to begin with. Simplicity came after. I used it so when I could see when volatility and price were telling me two different things. Use 30-second bars. Ronald, you're going to use 30-second bars. I just use my DOM when I'm trading MNQ. Let's see. So, yep. So now we understand the wick is part of the low or part of the high. Yeah, open and close is the body of the bar. Like here's an open, here's a close. Red, open, close. There's a high. Green, open, close, low, high. With a 30-second bar from trial and error, yes. I tried a lot of different things. Okay, so did y'all get a lot out of that tonight? Of when not to trade, when it's like chopping like crazy, when it's going into a level, where the entry is, where the stop is, how to execute the stop correctly, how to execute the when it moves down to break even correctly when it closes above, and how to execute the trail when it closes above. So I tried to take it really slow and do a John-style webinar. Right, it's repeat, 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 repeat. Is this the webinar y'all were hoping for? Awesome. Okay, I'm going to close out reminding you, check out the Sharpshooter course. It is worth it and it will help you, okay? Awesome. We all have a wonderful evening. And if you're watching this, again, check us out at apexinvesting.com/bootcamp for a free 30-day trial. Y'all have a good evening.